Hi everyone, another stock market update. They come thick and fast, don't they? Well, we've got some good stuff for you here. This is the price earnings ratios on the S&P 500. Again, you see energy being the cheapest based on share price relative to profitability banks. And they've had a good week as well. So banks turning up green, not much else really green, one or two of the semiconductor stocks. What about performance on the week? Well, that's been banks, energy, a few of the others. But you might question a few of the others like tech stocks, given that the valuations aren't particularly promising. And here's another way of looking at valuations is price earnings growth. Again, energy is cheap. Those have got PEG, price earnings growth under 1. But everything else looks pretty expensive. So that said, where are we on the market and how I see it? Well, I continue being somewhat risk averse. Those who are risk neutral or a bit risk loving might want to start buying into some stocks, but look at that monthly MACD. It is bottoming out, but I think I'll wait another week. It is looking to bottom out. That's the weekly MACD. That may well rise. These are all oversold, and most likely next direction is up, which is why you're seeing some of this. Will it hold? It could even do this, but it could be doing that on a downward trend. So remember what I've said. I see this as probably the most likely option, which is the S&P down over the next 12 months. So not exactly optimistic, is it? And then the most pessimistic scenario is that. Anyway, I'm not so bothered about that. What I'm bothered about is, do I buy in today or do I wait a week? Well, I'm going to wait a week. What I see here is really an upward move in more of a downward channel. Okay, so that explains why sometimes when you get these upward moves, you think, oh, is that the bottom? Well, actually, no, it's moving in a downward channel. How are some of the bellwethers, some of the things which really will need to move up in order for the market to move up? How are those? Okay, well, let's have a look at some of these. Apple, for instance, is within that upward channel. It's starting to ease up, but remember, it could just go up, down, whatever. If it goes to the bear case, you're going to be up 11%. If it goes to the bull case, you're probably going to be up closer to 34%, which is that. Now, what does that tell you? Well, it tells you either way, you're probably going to be up. So I don't mind holding on to my Apple, and if people are looking to buy into it, remember this big solid black line I've drawn is the lower end of the channel. Were it to go somewhere around here, then well, it's Apple, so I wouldn't really be that worried either way. What does that tell you? Well, from a decision-making process, it tells you, yeah, you'd be getting in. Well, Microsoft, this we really thought was going to continue on this upward channel, and it shows you what can happen with these channels. No, it didn't. It then, after years of having a great upward channel, it proved us wrong. And it's gone into the new channel, which is downwards. So what does that look like? Well, from here, you've got the bull case and the bear case. And the bear case gets you a bit lower down there. And you might say, well, I don't mind getting in, even though it could do that because it might go up. Well, you might say, I don't mind being in on that. I'm going to wait another week, certainly before I look at buying any more Microsoft. But I'm holding on to the current Microsoft I have. And you might say, well, why aren't you just trading your investments? I don't trade my investments in and out. I trade, I invest. They're two separate things. When I'm investing, I'm talking about investing. When I'm trading, I'm talking about trading. Okay, Amazon, another bellwether. Where are we on that little beauty? Well, I've given 3 cases there. Actually, ignore that one. Ignore that. You've got this one, okay, which would get you closer to about a 46% return. You've got this, which will get you, what I'm talking about, this is basically anywhere in this region here. So gets you about a 4% return. Either way, you're up. So you might think, well, it's not a bad place to put my money. It's not inflation beating, but it's Amazon. Meta, I do this just for fun now. I mean, look at how much that's dropped. That's dropped 63% to the base. It's hiding somewhere here behind all these buy recommendations. Look at the millions of buy recommendations. Doesn't make a difference, does it? Because the market still drags it lower. So the analysts are either wrong or people aren't listening to them. Probably people aren't listening to them, and therefore the analysts are wrong. 180% return is what you would get if it went to all-time highs. So you might say at some point, you know what, I might buy into that, and at some point I'm going to get 180% return when it goes to all-time highs. Costco, as you know, one that I like. Excuse all the extra squiggly lines. I do not know why my assistant has gone mental and not followed my instructions, but there you go. Blame the boss. We are here with this one, and I would expect a 22% return in a year on that. Obviously, with many of these, they can go up, they can go down, they can do this. And you might, let's say you got a big return of not 22%, but say 10% or 15% within a month. You might say, well, forget that. I'm going to take that. Why should I ride it across? And I'll wait till it drops to this lower trend before getting in. For me, we're still in it. It's okay. PayPal, she's done the same thing. She's just gone absolutely skit. Sorry, I apologize for this, but you can see the point here. 42.78% is the rise. 1 year, 9 months. Okay, so then we've got Johnson & Johnson. And I put this because it's so popular with so many people. Given bear, bull, and base case, you get the idea, don't you? All right. And where we are with that, you know what we're saying. You know where we are. Right, so let's look at Katera. Great, 51%. If it stays on, and that'd be from this base. Now, it's obviously made some of that already, but it could do this. Don't panic. As long as it stays on track here, that's the return you're looking at. Right, into energy. Projections for Halliburton. And look, that's a classic example of a company fallen outside of its channel, which we thought, oh, that's the end of that. It's gone back up in. That can happen. And that's why these channels and all sorts of this analysis isn't always 100% guaranteed. If it was, it'd be easy. We'd just follow channels and we'd all be rich. And that'd give you an 81% return on that projection. Okay. Where are we with this one? Marathon Oil. We're looking at 70%. You can see, you can print this out. Okay, print it out. You look at it and you go, right, I see what we're going at. As long as it stays within that parameter and on track, that's the return I'm getting. Okay, very simple. 23% for Occidental. That's the Warren Buffett one. It's the one we own as well. Devon Energy, similar kind of story. You see what? Yeah, you see it. Draw the lines. Drawing it. You get it. Marathon Petroleum. You get it. Okay. Adobe I've put because obviously it's been a popular one in the past and it's fallen off a cliff. Despite the fact that I think it's completely oversold. But we'll just keep an eye on it as a bellwether. It's still falling, so I'm going to wait before I make any decision on that. All right, so we're going to wait another week on that one. Eli Lilly, you can see what we're looking at. We're looking at about a 40% return if it stays on the median case. Worst case, drops 10% from where it is now. Okay. British pound, US dollar, you know my views on this, and this has been really messy. It certainly hasn't been a V-shaped recovery. It's not been V, it's more been do. A bit like British politics. But I still see that overall projection over the long term. United Health Group, another popular one. We've drawn some analysis for you there. Similar to the energy ones, isn't it? And it's an S&P 500. So it's a Dow 30 company, so it's a massive player. APA Corporation, up 70% is what I'd project. And you can see the channel in which it should go. If it goes outside that channel, we're in trouble. And if it falls within that channel, then it's not a fall that I'm worried about. If it rises during that channel, then I know it's playing within the rules. Okay? I've got 10 more slides. Don't forget my campaign for $1million.com to learn a lot more about investing. Okay. UK stocks dive to 2021 lows. Yes, they do. Is it time to get in? I will try and do more analysis on the FTSE 100 for you. This is just how countries are responding to high energy and food price and what the rest of the world is doing, just in case we want to learn from what everyone else is doing. According to the IMF, how are different countries using different policy instruments to tackle this. Stoner, we don't need to worry about that. $1 billion a gram. This is $1 billion a gram. US defense budget is $705 billion. Some interesting stuff here. It just tells you how much what the cost of various things were. I just thought this is interesting. If we take all the money off these people as a sort of 100% wealth tax, we'd cover the US defense budget for a year. That's China's defense budget. And that's the amount donated by charity. You can see why people want more donated to charity, because if they make that bigger, then they can make other things smaller. Okay? Anyway, just out of interest, I'm not going to make any political statements on all of that. And this is what trillions are. World GDP is 84 trillion. American market value is 1 trillion. Global crime revenue, crime does pay, 1.9 trillion, and so on. Wealth hidden offshore by the rich, 26.5 trillion. You'd think it'd be worth looking for, wouldn't you? American economy, 20.9 trillion. Anyway, feel free to pause and look at that and mull over where you are on there. Probably there somewhere. That little dot would be you. US economic developments, This is from Goldman Sachs. Which event are investors most focused on in America in October? US economic data. Okay. UK doesn't come on there. Total annual income retirees receive, including Social Security rights to pre-retirement income, again from Goldman Sachs. Guess what? So many people get insufficient in their pensions, basically. And this is why SIP, ISAs, and all you're doing by watching my posts is so important, because you make sure we get you into those golden bits where you're at least 70% getting of your pre-retirement income. Anything less than that, and you're underdoing it. Okay, this is US dollar surge. It's not just been a UK phenomenon, the rest of the world as well. So I just thought I'd share that with you. What about this? Index mostly bounces back. This is the S&P 500 and the returns after a poor year to date. So this is where we are at the moment. And when it's had similar poor years to date in the past, then 12 months later, it's generally been up. You might say it's a very small statistical sample you've got, Alpesh, but that's a bit of bullishness for you. Not bothered about that one, not really bothered about that one. That's your lot. Thank you very much, all of you, for watching all of this. Thank you very much. And look at the campaignforamillion.com. Please like and follow all of this. We want to make 1 million people better investors for their SIPs, their pensions, their ISAs. That's my campaign. That's the big purpose I've got in life, to make people's retirements a bit more comfortable by making them more knowledgeable about what it is they should be investing in or considering to invest in, and understanding who they're giving their money to better. Thank you very much.